Right now, there's no shortage of uncertainty in the market. As of the time that I'm recording this video, we've been seeing quite a bit of volatility in the past couple of weeks. Now, this current backdrop makes it quite timely to talk about today's topic. I'm sure we all know that the markets do not move in straight lines. There are seasons when the market is up and there are seasons where the market is down. One of the ways that we can respond to these changes in the market is to think about how to invest using a contrarian mindset. Now, the main idea that underlines the contrarian mindset is a concept that I'm sure all of us should be very familiar with. How do we make money in the markets? By buying low and selling high. There are two sentiments that drive the markets, and they are greed and fear. And being a contrarian means that we are trading, we are investing against the current market sentiment. What do I mean? Now let's take a closer look at these sentiments. We'll start with greed. The clearest sign of greed, we can see it when the market price is going up. Let's say some stock or some cryptocurrency that suddenly starts shooting up in price. What you'll notice happen is suddenly there'll be a lot of attention that is drawn towards this particular stock or this particular crypto. It will be all that the media, the social media will be raving about. Every day you will read about or hear about stories of people who made millions of dollars because they bought some electric vehicle stock or some meme coin or some monkey picture. And then what's the natural human reaction that follows? That's right, FOMO, fear of missing out. More and more people are gonna rush in to buy that. Everybody wants to make a fortune. Everybody wants to invest $100 today and become a billionaire tomorrow. So everyone is rushing in to buy these stocks, and as a result of that, demand goes up and the price continues to increase. But if we think carefully about this, if everybody is buying, who are they buying from? Who is selling to them? Yes, that's right. They are buying from the contrarians. When everybody is greedy, when everybody is rushing in to buy, the contrarians are the ones that are selling. The contrarians act against the market sentiment. So that was greed. Now let's talk about fear. So this example we saw was a really hot stock. But at some point it's going to get too crowded and demand is going to slow down. People who jumped in on the bandwagon and bought as the prices were going up, they're going to start thinking about ways to realize their profits. But as they're trying to sell out at these prices, they're realizing that, hey, demand is thinning out. There's fewer and fewer buyers who are willing to pay these kind of prices. More and more people are looking to sell, and fewer people are coming in to buy. So when supply outweighs demand, this is where the prices are going to turn and the market will start to come down. So the last batch of people who FOMO'd and went in at the high prices, they're going to start to panic because suddenly their dreams of becoming overnight millionaires have gone up in smoke. And their immediate instinct is to get out now, cut loss, abandon ship. You might notice also that sometimes at these moments in history is when bad news will strike. Like maybe a bad earnings report, or a global virus pandemic, or the Federal Reserve wants to implement measures to control inflation. As we have seen in recent weeks, bad news can really accelerate the downward movement of prices. And what follows is immense fear and mass capitulation. Many of these investors just want to sell and get out at whatever price they can get. So what happens to investors who buy out of FOMO? Essentially, they will buy high and sell low. And at these low prices, who are they selling to? Who is buying from them? That's right, the contrarians. So at a time where there's immense fear and everybody is trying to sell to get out, contrarians are the ones who are buying up these positions, buying up these stocks, buying up these cryptocurrencies. Either they are buying to cover their short positions, or they are buying because they think that it will still go up in the long run. And these low prices are a huge sales and huge discount to them. The main idea here is that if you want to be systematically profitable, don't follow the crowd. Don't FOMO when investing. FOMO can really kill you. What I'm suggesting here is that we learn to think and act like contrarians. And that means we only think about buying when prices are coming down and when everybody is rushing to sell. Don't chase prices that are already going up quite significantly. At the same time, if you want to sell, think about selling only when the prices are going up and there's so many people who want to buy from you. And that is how we can buy low and sell high. It sounds simple, but in reality, many times, this is going to go against our human nature. It takes time, it takes practice. But please note, the main point of this video is just to introduce and explain the main ideas behind the contrarian mindset. You still have to do your own research, form your own convictions, and make your own decisions about buying or investing in a certain stock. Don't buy some rubbish stock just because the price looks cheap. Another thing is that sometimes we can buy low and the price can go even lower. Sometimes we can sell high and the price can go even higher. It's impossible to find the market top and the market bottom accurately every single time. Sometimes we are going to be wrong, but the point here is to avoid buying at the top and selling at the bottom. Don't blindly follow the herd to the slaughterhouse. That's it for today's video. Like, comment, subscribe if you found it to be helpful, and I will see you in the next video.